Welcome to this session. We are going to look at business mathematics, but we've combined business mathematics of senior 1, of senior 3, and then business arithmetic of senior 1. Remember, we always have that one in term 3. So in this video, we are going to learn how to find the mortgage, simple interest, compound interest, discount, loss, hire purchase, and then also taxation. So those are some of the things that we are going to look at. And now we want to see how mathematics is applied in everyday business. So business mathematics, we are going to simplify it in this video. And this is the teacher Isaac Tuhire again take you through. And I would request that you like, subscribe, and share if at all you've not subscribed. Here we are going to start with the simple interest, and for the case of simple interest, under simple interest, the interest is uniform for the time that is given. Take an example. If we say that it is for 3 months, then the principal for each month is the same. So under simple interest, the interest is always uniform. And here the formula for simple interest is equal to principal times rate times time. But here our rate, we say out of 100 and then times time. Now here we have one example that says a person deposits 500,000 at 12% per annum for 3 years. Find the simple interest and amount after 2 years. So we shall come here and we say that this 500,000 is the one that is going to generate interest, so it works as our principal. And then 12% is the same as 12 out of 100, and then time is 3 years. So we shall just come and we substitute. We shall say that simple interest is equal to principal times rate times time. Our principal is 500,000, and then our rate is 12%. That is 12 out of 100. Then times 3, that is time. And then we get our answer as 180,000 shillings. But please, whenever we are handling this, read the item and understand it better. An example here, what if I asked you that a person deposits 500,000 at 12% a month for 3 years? This 12% is for a month. So I'll need now go ahead and I change the 3 years to month if I'm to multiply there now. So I always read these questions and interpret them right. The moment you miss out, for you just master the formula, that is principal times rate times the time, then you just multiply, you won't get the right answer. Please go ahead and read the scenario. Even if here is still, I can come here and I say that a person deposits 500,000 at a simple interest rate of 12% per annum for 24 months. They are talking of per annum, and now you need to, and they are giving us 24 months. It means that now that they'll be talking about years, so you have to change the time which is in month, then to years. And then here simple amount is equal to principal plus simple interest. Assume you deposit 500,000 in a bank. Then they tell you that at the end of a year, you get you get interest of 100,000. So to get the total amount that you find on your account, you are going to get the interest, that is 100,000, then plus the principal that you invested at the start. And then here our formula for amount is equal to 500,000 plus 180,000 which is giving us 680. So this is all about simple interest. Principal times rate times time. Then also we have compound interest, and here interest is different at every interval. So what changes the interest? Also the principal keeps on changing after each interval. And now for the case of this one, it is compound interest. And compound interest, the formula here is amount is equal to amount under compound interest. The total amount is equal to principal into 1 plus r out of 100 power n. Power t, power n, some use power t, power n, but t represents time. Even if we use the n, still it represents time. But whenever we are dealing with compound interest, that is the money that one will earn in addition to what he invested at the start. Assume I borrow, maybe I lend 100,000 to someone. Then on paying me back, he pays me 160. So that extra money on top of 100,000 that I lent out is what we call interest. And now that here I have amount, so I'll come here and I say that compound interest is equal to amount minus principal. How much did I borrow? How much have I got? How much money has my principal generated? So that's what we call compound interest. Then here we have our example that says Isaac invested 1 million in a bank at compound interest rate of 10% for 2 years. And you can see that the amount that is going to generate the interest is what we call principal. So here we shall come and we will use our formula that says amount is equal to principal into 1 plus r out of 100 then power t. And this is what we have here. It is 1 million into 1 plus 0.1, but 0.1 comes from here. R, which is 10, divided by 100 is same as 0.1. Then power 2, whereby t is the time. So whenever we compute this, we get the answer as 1,210,000 shillings. But they are not asking us the amount. I'll come back here and I ask myself, if after 2 years I'm going to find 1,210,000 shillings, when I've deposited 1 million, how much more money will I find on my account? First of all, I deposited 1 million, and then I'm seeing 1,210,000. Means that extra money on top of this 1 million will become the interest. So we shall find the compound interest by subtracting the principal from the amount. And then when I come and here and I subtract the principal, the amount which is 1,210,000 minus the principal, that is 1 million, I get 210,000. But please don't forget to give a conclusion. And then for the case of discount, discount is the same as a deduction that a seller gives a buyer on the market price. I believe most of you have visited markets. Assume you are going to buy a calculator at the stationery, but you reach there, someone selling them says, E1 calculator is for 35,000. In case you bargain, you negotiate, then she reduces to 30,000. That 5,000 by which the market price has been reduced is what we call the discount. So discount is all about deduction. And in fact, even you hear when towards the festive season, or in festive season, they always give discounts. Whenever they say, I've given you a discount of 10%, means that I've deducted for you 10%, you'll pay the remaining percentage, which will be 90%. And then that's how we find discount. Market price minus selling price as the discount. Then how do we get the percentage discount? It is discount divided by market price times 100. Then here we have one example. A book is marked 50,000 shillings and was sold for 45,000. And now here they are saying find the discount. If at all you reach in the shop and then they say that each book is sold at 50,000 shillings, and on buying it, buy it at 45,000. So the amount of money by which this market price has been reduced by is what we call the discount. Then we shall have market price, then minus sale price or selling price. So we shall have 50,000 minus 45,000, that is giving us a discount of 5,000. So that is discount. And then for the case of percentage discount, you can come and say discount, which is 5,000, divided by market price, which is 50,000, times 100, and the answer is 10%. So it means that when teacher Isaac was given a discount of 10%, it means that he paid 90% of the market. For the case of profit here, profit is equal to selling price minus buying price or cost price. So that is the formula for profit. And when do you make the profit? You make the profit when the selling price is greater than the buying price. Then percentage profit is equal to profit out of cost price times 100%. Then here we have our example that says that Faith bought a goat at 80,000 shillings and sold it to Sumaya for 88,000 shillings. Determine profit and percentage profit. So profit here is equal to selling price minus buying price. And then our profit is equal to selling price, which is 88,000. Then minus cost price, that is 80,000. And I get the answer as 8,000. Then percentage profit, we have profit divided by cost price, then times 100. And here we get 8,000, the profit, divided by cost price, that is 80,000, times 100, which is giving us our 10%. Then we have loss. In most cases, when we start up a business, our aim is always making profits. But sometimes things may not go well and you end up now making a loss. When does someone register a loss in a business? If at all what you are earning from the business is less than the capital, then just know that you are now operating in losses. So to get the loss, you get the cost price, because now it will be more than or greater than the selling price. If I bought a hen at 50,000 and then I sell it at 45,000, now that is a loss. You can see that the selling price will be 5,000 less than the buying price. So loss is equal to cost price minus selling price. And then percentage loss is equal to loss divided by cost price times 100. And for more information, percentage decrease, percentage discount, and percentage loss are the same. So here we shall come and we say loss out of cost price, then times 100. Then I have one example that Faith bought a book at 80,000 shillings and sold it to Sumaya for 72,000 shillings. They are saying that determine loss and also percentage loss. Remember, we have agreed that loss is equal to cost price minus selling price. But now buying price is the same as cost price. The buying price here, I'm seeing 80,000, and then selling price, I'm seeing this. So when I come here and I substitute my formula, CP is the same as cost price, SP is the same as sale price. So we get a difference of 80,000 as the loss. And then for the case of percentage loss, now we shall come and we say that loss which is 8,000, loss which is 8,000, then divided by selling price or cost price, that is 80,000. Then here times 100 times 100. So that's how we can find percentage loss. And here when you compute, you can see that by 8,000 once, by 8,000 10, and by 100 by 10 in 100 I get 10, then 10 divided by 10, that is 1. So the answer here is 10%. 10% is the percentage loss. Then also here we have hire purchase. When we talk of hire purchase, in the case we have seen in most cases, you can be going to buy or purchase something and you find yourself not having enough money. But you don't just say, I've left that item. What we do, we say that if at all I can first, if at all you can accept, I would buy this item in bits. Maybe I will first make a deposit, then you pay the remaining money in bits or installments. And you can see that even your school fees, some schools demand zero balance at the start of the term, but still some other schools receive a given amount at the start of the term, visitation day also a given part, and even some even can extend to close to the end of the term a learner to finish all the school fees. So there are some schools that go for these installments theory, and even some say half at the start of the term, half at the visitation day. But now purchasing something in bits or in installments is what we call hire purchase. And how do we get hire purchase price? Get deposit, then deposit, then plus total installments. Whenever we talk of total installments, how do you get total installments? We shall come here and we say that the number of installments times the cost of each installment. Those people who always buy boda banja tugende, they always make a deposit of either 700, some 400, and even some 500. Then they pay the remaining money in equal installments. They can be weekly, some agree monthly. So that's how they operate. But in most cases, those installments have equal amount. If it is saying 70,000 a week, still you'll go for 70,000 a week. Now you see like a TV costs 1.2 million cash, but if you don't have that amount, now you come and you go for option 2. You can first make a deposit of 400, then followed by 5 monthly equal installments of 200,000 shillings each. Now they are saying determine the hire purchase price. Of course, you are seeing the deposit and then 5 monthly equal installments. There are 5 months, but each month you'll be paying 200,000. So that is the formula here. And then when we come to substitute here, we shall have the deposit, which is this. then time plus 200 times 5, then I get 400, then plus 1 million, and I get a total of 1 million and then 400,000. This is all about hire purchase. And then for the case of taxation, everyone here pays taxes. We have what we call indirect taxes and then direct taxes. For the case of indirect taxes, they are levied on goods and services. But for the case of direct taxes, they are levied or imposed on individuals' income, companies' income, something like that. Any tax imposed on income is what we call direct tax. And now when we are dealing with this number of taxation, there is what we call non-tax-free, all tax-free incomes, all non-taxable incomes, and those are allowances. In some countries, allowances are non-taxed. And then taxable income is the amount of money that is subjected to taxation. So amount that is supposed to be taxed is what we call taxable income. So then gross income is the amount of money one receives before any single deduction is made. The amount of money having here the allowances, having the NSSF if at all you are paid for, having also that income tax. So that figure that has all other incomes embedded in it is what we call gross income. So to get the taxable income, I get gross income, the total one gets, then minus what we shall not tax, and those are the allowances. And then we shall come here to income tax. From the tax slabs, we always come here and we say that, and each range, here incomes are divided in different ranges as we are going to see in our example, but every range has its own rate. And to get the income tax, you get the taxable income times the rate. Then we have also what we call net income, or take home, or net pay. In most cases, when workers are paid, what does not appear on their account can either be or is income tax. If at all you are also paying NSSF, NSSF will not also work. So whenever they ask us net income, it's gross income minus compulsory deductions. But now in most cases you may find when they are only supposed to deduct the income tax. But should you find also NSSF to be deducted from an employee, then you'll need to know how much will not come on someone's account. That will be income tax or income paid as tax, and at the same time NSSF. But for now, we have net income as gross income minus income. We have here our scenario that reads that Faith is an employee at a certain school as a chemistry teacher. She has been informed by the head teacher that every teacher will pay taxes from July 2025 according to the adjustments made. That the income tax structure and taxable income of employees at that school is given in the table below, and here is the table. Then Faith earns a gross monthly salary of 874,000, which includes the following tax-free allowances: marriage 30,000 shillings per month, housing 1 out of 20 of the gross monthly income, medical 156,000 per annum, transport 2,000 per month, then child allowance for only 4 children at the following rates: 8,500 for each child of 18 years of age and above, then 10,500 for each child aged 12 years and above, but below 18, and 12,300 for each child below 12 years of age. Faith is married with 3 children of ages 11, 14, and 17. And that's they are saying, help Faith know her total allowances. Determine her taxable income. What is the percentage of her gross income that is paid as income tax? And then find her net income. Now, friends, whenever we read this scenario, it's better you go ahead and extract important information from that. First of all, you can say that this is our table for taxable income. Then also, this is the gross monthly income. The gross monthly income, also this one is very important. This is very important. And now the allowances. What are you seeing the gross income? The gross income is in month. This is the gross monthly income. But there are some allowances which I see, like medical, here per annum. And also I'm seeing a marriage here, the allowance for children, the allowance for children as for only 4 children. And then we have also here their ages. Faith's children have the following ages: 14, 11, 14, 11, 14, and 17. So first of all, maybe you have seen some items when they are saying that maybe transport allowance is given for every day, and then you need to change that daily transport to monthly transport allowance. So you need to be very careful when you are attempting this such an item. You have to make sure that you have that money in the same units. If it is monthly allowances, you have monthly allowances. If it is annual allowances, please have annual allowances. But always come and see this. They are saying income per month. Means that it would be better. Now that gross income is in month, let you also find the allowances in month. It's when it will make sense. So I would say that let us always write our allowances in month. So when we shall be on the track, depending on how the scenario is. If the taxable income is in month, then also the allowances and gross income should be in month in order to get the monthly income tax. Maybe still on that note, I may ask, what if the month is June? What if the month is September? Now I would like to know the income that will be paid as tax. And I will need to ask myself, what if there is a lunch allowance for maybe 5,000 every day? Do you know the number of days in that month? Can you find food allowance for the entire month of June? Can you find the entire allowance for food, if at all, every day an employee is given 5,000 for lunch? Can you find the total food allowance for the entire month? But it becomes hard if at all you don't know the number of days in a certain month. So number of days in a month does not only work in LCM, especially in item 1, but also here in taxation. You should know that. Assume they don't give you maybe a month has 30 days. It is just open June. Maybe like June has 30 days. But assume the question is not specific, whether July, whether June. It's better to come and say that taking taking a month with 30 days. That word will communicate a lot. Even you can say taking a month or with 31 days. And also, if at all you are not seeing any single allowance in the question, then you just know that the allowances will be equal to what? 0, because you are not seeing any allowance. It means that the whole of gross income will be taxable income, because out of what he earns, he doesn't have tax-free income, and those are their allowances. So those are some of the things you should note before attempting this item of taxation. Maybe I can take off this, and now here we are going to find the allowances. And here we shall come and we say that allowances first, because it is asking us to find allowances. Number 1, I have marriage. And marriage, here we can say monthly allowances. Here we have marriage, and then here we have marriage as, but you should draw in a table format such that your work looks nice. Finding allowances. So here we shall have marriage, which is 30,000. Then also I have housing, which is 1 out of 20 times 874. Then here 1,000. And here the answer is, and then here we have our answer as 4,700. That is housing. Then also here I have medical, but remember medical is per annum, so I'll get my 15,666 divided by 12, and then here we shall have our answer as 13,000. That is medical. And then also here we shall have our transport, which is already given in month. That will be 20,000. And then children now come here. They are saying if a child below 12 years will get this. Then for a child above 12 but less than 18. But now I have two, the one of 14 years and 17 years. Means that here this one will get this at the same time will get this. So here children allowance we shall have how much? That is 12,300 plus the one of 17 and 14 get the same amount, and that is 105, then times 2, because there are two children. Here we shall have 14, and then 17. Those ones qualify to get the same money. That is 10,000, and then here 500. We shall have 1, 2, 3, 0, 0, then plus 21,000. And here we shall have the total as 33,300. Now we are going to find the total allowances. So we shall come and we say that is 43,700. Then plus, shall also add there 13,000. Then plus transport, which is 20,000. And then plus the children, which is even marriage, which is 30,000. And then lastly plus children, which is 33,300, and we get a total of 4,000. And then here we get the total allowance as 140,000. So this is our allowance. But remember, we need now to find the taxable income, and the taxable income is equal to gross income minus taxable allowances. Taxable income is equal to gross income minus allowances. But now that I have my allowances as this, so I can be able now to find the taxable income. So I shall come and we say that taxable income is equal to gross income minus allowances. But I have gross income as 874,000 minus 140,000 shillings. Then we shall have our taxable income as 734, then here 1,000, and this will be our taxable income. So after seeing our taxable income, you need to ask yourself, where does this taxable income lie here in our table? Can it lie between 500, from 500 to 600? No, but from 600 and above. So now here I'll just come and I fix it there, that this is 73400, and that can be our taxable income. It lies there because you cannot tax what you don't have. Now after that, I'll come here and I say that let me have here taxable income, then I'll have rate, and then here income tax. And to get the income tax, you must multiply taxable income by the rate. So this is going to be our format for the table. First of all, here the rate is in percentage. First of all, you see 100,000 minus 0. Please, this one is a place value holder. Always ignore it when it comes to subtraction. It means that 100,000 minus 0, I'll get 100,000 first. And the rate is 7.5. Then our taxable income here will be 7.5 out of 100 times 100,000. And here we get our answer as this one goes with that, this one goes with that, and then we remain with 7,000, then 500. Then also we shall come and proceed. Here, what about second? Also here I will come and ask myself, from 100,000, please always ignore this one here. Ignore this one and replace it with this 0. Or you subtract these ones. You get 200, then minus 200,000 minus 100,000. Still here we shall have 100,000 and the rate is 10. And then here we shall have 10 out of 100 times 100,000. Then here we get our answer as 10,000. And then also here, I'll come now, I deal with this. From 200,000 to 300,000, how much is there? Still it is 200,000, 300,000 minus 200,000, I get 100,000. And the rate here is, 15%. And then here we shall have 15 out of 100, then times 100,000, and we get our answer as 15,000 as the income tax. Then also we can still proceed. I need to tax 734,000, but so far now I have 300,000. So also I'll come here and I ask myself, how much should I tax? Still, from 300 to 400, I'm seeing 300. From 300 to 400, I'm seeing 10. I'm seeing 100,000 still. From here, that is 400,000 minus 300. So I'll come here and I say, what about 100,000? So here we shall have the rate as 22.5. Then here we shall say 22.5 out of 100, then times 100,000. And here we get our answer as 225, and then here and then there 500. 225 and then 00. Also we have another range, and then here we shall have now from 400,000 to 500,000, I'm still seeing 100,000, and then the rate is 30%, and then here 30 out of 100 times 100,000, we get the answer as 30,000. Then also we shall proceed, and we have our, now part A, this was done, allowances. Then part B, taxable income, is also done. And then also here from 500 to 600, I'm seeing also 100,000, but the rate is 35. So I'll say 35%, 35%, and then here we shall have 35 out of 100, then times 100,000, and we get here the answer as 35,000. But now you need to come and ask yourself, how much is this so far? 100 plus 100, 200 plus 100, 300 plus 100, that is 400, plus 100, that is 600, 500, then plus 100, that is 600. Because it is 100,000 6 times, yet I need to tax 734,000. Now, if I come here and I say that this is 734,000 minus 600,000, and here the answer that we get here in between, get 134,000 as the answer. So it means that here, lastly, we shall not consider, here we shall say the remaining money is 134,000. So should you add all these? If you add this, you also add this, you also add this, you also add this, you add this, you add this, and this, and you don't get your taxable income. You don't get the taxable income. Then you have to question. You have to ask yourself, where have I made a mistake? Because this is the taxable income. If at all you are not getting the taxable income that you have found from your calculations, then there should be a mistake somewhere. Maybe here we can proceed, and remember here the rate is 50%. So we shall have 50 out of 100 times 134,000, 134,000, and here the answer is, I'm seeing the answer is 6,710,000. Now after that, I'll need to come here and I ask myself, maybe now that I can take off this, allow me take off this, allow me take off this. So after that, we shall come here and we say total income tax. Total income tax. And now here we shall have, here we can have 75,000, no, 7,500 plus 10,000 plus 15,000 plus 22,500 plus 30,000 plus this 1,000, then plus 67,000. And what is the total? Is what we want to look at. And then here we have the total as 187,000 and the income tax. And now they are asking, what was the percentage of gross income paid as income tax? So here we shall say it will be, after getting the income tax, it will be income tax then divided by the gross income, then times 100. And here we shall have 187,000, then divided by 100. 1,874,000, 10 times 100. This is the gross income, and then this is the income tax, and then you'll get the answer. And then here we are getting our answer as 21.40%, which is 21.4%. And then here they are asking us net income. Net income is equal to gross income minus income tax. So to get the gross income, we shall come here and we ask ourselves, the income tax or the money paid as tax does not appear on our account. So what will not appear will be deducted from our gross income. But the allowances still come, so we shall get our gross income, which is 874,000 minus the gross income, which is 187, then 000. And then here we get our answer as our final result as, maybe you can write using red, final answer as 6,870,000 as the net income. Net income, that is the amount of money an employer remains with after the compulsory deductions have been made, and this is our net income. So that's how cheap taxation is. The moment you get to know where should I put my taxable income, just identify the range. Just within a minute, you'll move out of the paper when you are sure of the 20 scores. And then here we come to the next item about mortgage. Mortgage is just a loan acquired by an individual to buy a house or a home. But when we are dealing with mortgage, how do you get the money that we take as a loan? You must get now here mortgage is equal to sale price, then minus deposit. You will not take that home before making deposit. So that's how we find the mortgage, the amount of money that we take as a loan. Now, when I read this, you can see that then you repay the remaining money in installments depending on the rate that the bank may be willing to charge, and also the time that someone is willing also to give someone who has taken the loan. So here we shall come and we find what is mortgage. That is the sale price or cash price, then minus deposit. So here we shall come and we say what is deposit first. Deposit is equal to 20% of the price, that is 20 out of 100, 10 times 100 millions. So that's what I have there. So when I compute, I end up getting 20 millions. 20 millions as the deposit. Now, after getting a deposit, you come here and ask yourself, after making a deposit of 20 millions, and I have to pay 100 millions. So the remaining money after making the deposit is what we call amount of mortgage. all amount of money borrowed to purchase a home. So we shall come here and we say that mortgage, all amount borrowed will be equal to sale price, then minus deposit. And then here we shall have our sale price, which is 100 millions, then minus 20 millions. And then here what we get? We get 90, we get 180. No, we get, when we get 100 millions minus 100 millions minus 20 millions, I get 80 millions, the amount of money borrowed. So this is part A. Part A is done. Then also part B, they are saying calculate the annual installment and show the formula and substitution. But now we may not need this formula here. First we shall come and we say that they are saying compound interest per annum and for 6 years. So here you are all aware that amount is equal to under compound interest, that is P into 1 plus R out of 100, then power N. But here we shall come and we say N is time given, and P is the principal. Principal is the amount of money lent out, borrowed, or that you have invested. And then here our rate is 10%. So when I come here to substitute, I'll get here my principal, which is 80 millions, because now this is the value for the loan. So after making a deposit of 20 millions, the remaining money was to be paid or to be taken as a loan. Then here into 1 plus 10 out of 100 rate, then power 6, because that will be our time. And then here we shall have the power is 6, and then here we shall have the answer. We shall have our amount. I'm seeing 141,724 880. So this will be the total amount that one will need to pay. Then here they are saying calculate the annual installment. If at all in 6 months in 6 years I have to pay the whole of this money. Now I'll ask myself, how much will he pay annually? So here we shall come and we say that annual installment will equal to this 141, then 724, then 880 divided by 12 to get the annual installment. And then here we shall have the answer as, means that every year he will pay. Every year he will pay. Every year he will pay. And here we shall have 118,110, and then 406.7. 667. So this is the annual installment. Annual installment. So that will be our annual installment. And then here they are saying that find the total interest. Maybe I can take off this. Find the total interest. Saying find the total interest. Find the total interest. Find the total interest. Find the total interest. Maybe I'll come here and I say find the total interest. At 1, the total interest paid over the life of the loan. Now here we shall say compound interest is equal to amount minus principal. First of all, the amount is 141. Maybe should start from this side. So we shall come and we say that simple interest is equal to amount. How much will now pay in 6 years? So we shall say 141,724 then 880 minus the principal, which is 80 millions. So that is it. And then we shall have our compound interest as, maybe here a moment. Here annual installment, they are 6 months, not 12. They are 6 years. Please equal annual installments over 6 years. I'll come and I ask myself, if this is the total amount that one will pay in 6 years, so how much will someone pay every year? So I'll come now and make sure that here we had made a mistake. I don't divide by 12. Instead, I'll come and I divide by 6. So here we shall have 17, shall have 14, 1724, then 880. Then I divide by 12. I divide by 6, not 12. Because I'm seeing here there are 6 years and I want to know how much will one pay every year. So here, this is where the mistake was. So I'm not taking this. Instead, I'll come here and I say that now the value will be 23, comma 62,081, 3.333. So this will be the annual installment. So he's going to pay this amount 60 for 6 years. This is for 23,620,813.33 will be the amount paid every year. And then for the case of compound interest or the interest, I'll get the amount minus principal. Amount, then minus principal. And here we shall have 141, 724 and then 880 minus the principal, which is 80 millions. And here we get the answer as 61, then 724, then here 880. It means that this is the what? The interest. This will be now our interest that we need for part C. Then part E says, find the total amount of money one spends in the house. That is deposit plus all repayments. So we shall say that total amount is equal to amount then plus deposit. How much do I need to pay in total? That is 141, then 724, then 880, then plus deposit. And here we have seen the deposit is for 20 millions. 20 millions. So here we shall have the total amount of 161.161 no. If I add those ones, I'll get 161, then 724, and then 880. So this will be the total amount that one will pay from the start, including the deposit, to the end of 60 years. So that is all about mortgage. But I repeat that mortgage is the amount of money one gets, or amount of money one gets as a loan to buy a home or a house. And how do we get that mortgage or the amount of money get taken as a loan? You must get the sale price for a house minus the deposit to get the amount taken as a loan. So here we shall have, as we have seen, that is 100 millions, then minus 20% of 100 millions is 20 millions. So you end up getting 80 millions. And here the rate is 10% per annum. So you have to make sure that the interest is different at all intervals. And for this case, it's better use the formula that A is equal to P into R1 plus R out of 100 power n, whereby P is the principal. No longer now this 100 millions. For you now, you may quickly run to this. But P stands for amount taken as a loan, and that is 80 millions. 80 millions, then into 1 plus R out of 100 power n. R is here, it is 10, and then n is 60 years. So this is how we can do numbers about mortgage. Then also here we have the second number that says a house costs 75 millions, a buyer pays 25% of the house as the deposit and borrows the rest from a bank as a mortgage. So here with the bank charges 11% per annum simple interest on that term. The loan is to be repaid in equal annual installments over 5 years. So here you come and ask yourself, if at all I come here and I ask myself, how much is the deposit? How much is the deposit? That is 25 out of 100, then times 75 millions. 75 millions. 75 millions. And here the answer is, here we get our deposit as 18750, like that. So it means that we get 18,750,000 shillings. So here, how much is borrowed? Amount borrowed. Amount borrowed. Amount borrowed. Amount borrowed. So it will be sale price, then minus deposit. Sale price minus deposit. So here our sale price is 75 millions. 75 millions, then minus deposit, which is 1875, then 000. That is 18,750,000 shillings. Maybe I need to write it poorly here. I need to write it right. Maybe my handwriting here messed up. Here we shall come and we say 775 millions, then minus deposit, which is 1875,000. And here we may get the final answer. We shall get the final answer as, so we shall have amount borrowed is equal to 5 is equal to 6, then 250,000 shillings. So this will be now the mortgage amount of money that is taken as the loan. So this will be our mortgage. Then part B says, find the total interest to be paid over 5 years. So I will come and we say here interest. So we shall come here and we say that simple interest, remember, you see the simple interest rate of this. Then per annum. So here we shall come and we say the principal times rate times time. But now our principal is this one that is borrowed, that is 56 to 500. Then times rate, which is 11 out of 100. Then times time, which is 5. And so here we shall get our simple interest is equal to, shall have the answer here as 30 millions 937 and then 500. So this part is done. We shall have this part is done, and also here this part is also done. Then the total amount to be repaid to the bank. Here amount under compound under simple interest is equal to principal plus simple interest. So our principal is 56 millions, then 250,000, then plus the interest, which is 3937, then here 500. And then here the final result. The final answer here is amount is equal to, the amount is equal to 87187, and then here 500. So this will be the total amount that will be paid to the bank. And then what will be the annual installment? Now, whenever we are getting that, still come and ask yourself, how many years? 5. How much will I pay in total? It's 87187, then 500. Still, you can allow me take off this. Still, you can allow me take off that. And still allow me take off that. And then here we shall come and we say that, so it will be annual installment is equal to amount divided by number of years or time. That will be amount, but already I know what he will pay in all 5 years. So here we have 87187, then 500 divided by 5, divided by 5, divided by 5. It means that here annual installment every year could be paying 17437, then here 500. So this is for part C. 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 And then here, part B says, part B here says, part D here says, now part D. How much? It is part D and part C. Then part E, part E, part E. So shall come and they ask us, find the total amount of money the buyer spends on the house, deposit plus repayments. So we shall have total amount is equal to amount then plus deposit. Do I have the amount? It is 87187, then 500, then plus, that is we shall have here our deposit, which I've calculated earlier as, here we shall add 18750, then here 500. Now our deposit is 50, then 00. When we do this, shall get here our answer. Our answer as our answer as 1 0 5 9 3 7, then you have 500. And now this will be the total amount to be paid for the house. This will be the total amount to be paid for the house. This will be the total amount to be paid for the house. So that is all about the mortgage. Just you need to know the mortgage is got by subtracting deposits from the sale price. The remaining money will now work as the loan. So that's what we can say about the mortgage. And then this shows that business mathematics help us make better financial decisions in our daily life. Thank you so much for watching. Do not forget to like, subscribe, and share. Please, sharing is a key. Do not stop sharing these resources. The more you help people, the more you benefit. Meet in the next session.